Hello and welcome to a presentation on the 5 stages of putting on a trade. I'm just starting out this live stream, and now that it's up and going, I need to go and find the actual link to it. And then I can share that into the community, then everybody can come here and see it. But let me refresh this, and then it'll give me the direct link. There we go. So as you can see, I'm starting to do some live sessions with the membership only. We've got an unlisted live stream going, and we've got a few people joined in. That's great to see. And I'll point out a couple new features to it. First of all, there's the YouTube chat. Let me type it in here. Some new features. I have to spell it right now. So in the video, I've got 2 different chat streams put up into place. You can see that now says some new features that I just typed. Chat on YouTube. And that'll come up. And we also have chat on Discord. So now you can put your chat in either place, and it'll come up on the screen as I'm going through the presentation. And I'd like to get as much of your participation as possible. And the main reason I want your participation is because you learn better the more you participate. The more that you get engaged with this, the more that you are going to retain it, and the better it's going to be helping you. So what I did through the day today is I took the presentation from this morning based on an article I wrote a short time ago, and then I created a little bit of a PowerPoint to go along with it. So this morning we went through the same thing, and we started talking about all the stages of a trade. And then what I've done is I've taken the same content and I've just put it into slides now in a Google Sheet context. And then I've actually embedded this in here as well, so you can see the 36 slides and you can follow along with me in the course. And I can put that up into YouTube chat. Hello, Jimmy. Good to have you here. I'm not sure if that came up properly in the chat. I'll see in a second, I guess. Yeah, intro to cryptos.ca/lessons. I guess it's marked it as orange in this anyway. Welcome to live chat. Remember to guard your privacy and abide by our community rules. I've never seen that before. And I'll put that into our Discord too, so that you're over there. You can just click on that link. Might be easier. So today is part of week 3. In week number 1 of the course, we went over some basics of getting prepared for trading, really talking about the dangers of trading and the difficulties of trading and how to overcome some of those by using rule number 1 and rule number 2, our risk control rules, getting all prepared for the dangers of trading before we started going further. In week number 2, it was a lot of self-study where it's the same material I go over, I guess, all the time on all the videos, is the technical analysis tools, the chart patterns that we look for, and some of the technical indicators that we use. So hopefully that those webinars, those videos, and that training section in week 2 was helpful for you. But you're welcome, and if you have any questions, you're always welcome to ask questions all the time in any of the chats, any of the videos, any live stream. Always welcome to ask any questions. Now in week 3, we're taking that information and we're putting it all together into the whole picture. So today is one of the views of that whole picture, and that's talking about the 5 stages of a trade. And if you have any questions, Jimmy and whoever else is watching, say hello in the chat. Let me know that you're here. If you have any questions, fire them off anytime. You can ask them over on Discord, or you can ask them on YouTube. Let me click this back again so we see what's immediately going on in Bitcoin. We keep our eye on that over here all the time. Just keep watching 45, 28 Bitcoin, 56 Bitcoin, 28 Bitcoin, 30 Bitcoin. Just keep watching those trades to see what's actively happening in the price of Bitcoin as we go through the presentation. So mastering the 5 stages of a trade, January 2019. The 5 stages are: identify an alert. Then the second stage is when the alert is triggered. The third stage is when we are setting stops. The fourth stage is when do we add on to the trade. And the fifth stage of the trade is taking the exit or taking profits. So where we are right now in January 2019, we may be on the foothills of a profound bull market just starting right now. And however, right now we're not looking for bottom formations anymore. Most of that work is done, unless prices break through these recent lows that they are threatening it. And if they go down to new lows, then all of our work starts again, because we're looking for that number 1 point. But for now, all looking good, except for OMG is the only coin that has broken down to new lows. We have all of our alerts set, and many of them are already as trades that are in play. We mark them as holds in our spreadsheet. We have already identified all the chart patterns. We've marked out our entry and our exit targets. We've set up our emergency stop loss. All of this has been planned in advance already. And once the alert has been triggered and we put on our buy and we buy our position, then at the beginning of each trade, we are on guard with rule number 1. If prices prove as correct, then we can move our stop above our entry and we can relax, mostly. So this is pretty much where we are now, that we've identified the chart patterns already. Many of the alerts have been triggered, and as the alert is triggered, we are on guard right away with rule number 1, watching to be sure that we only keep a trade that is proven as correct. Once it's proven as correct, we move our stop above our entry and we can mostly relax. So that's pretty much where everything is right now in our actual trading. Which Discord is that mirroring? This is for the Discord chat, where it is only for lifetime members and people who have taken our course. So it's called the Course Daily. And if you are on our Discord and you don't have access to that, and you are one of our lifetime members, then send me a message on Discord, Crocatoo. I'm not familiar with your name on YouTube here, but send me a message on Discord. So there's an overcap of where we are now. So stage 1 of the 5 stages of a trade is to identify an upcoming trade. So we see a chart pattern like this where we have our lowest point. It's a break of the downtrend line. We could call this a 1, 2, 3 bottom formation, a good consolidation pattern building up here, and the moving averages are crossing over. So all of the main components of a trade signal are all built here. We could set out an alert even before this candle went up. So we're going for identifying potential markets as alerts. We're going to identify the chart pattern. We're going to write down our entry, our target exit, and where our stop loss is going to be. And then we're going to take a screenshot of our plan right at the start before we've put on a trade. This is how we're identifying which ones would be the trade. This is stage 1. And you can see here by this screenshot from the Mega Crypto Alerts spreadsheet. Let me just drag this over here and I'll go to the Binance Watch. We can see here that we have the coin. We have the date that the trade went on, or the date the alert was set. And when the alert is set, we have a target entry and a protective stop loss that we're imagining. And we have a screenshot of it. You can see here also we have the trade type. So we're starting to track how many of the internal 1, 2, 3s are working. How many springboard trades are working? What's their success rate? How about this the simple trading plan style of trade? Each of these are different trades. And we were looking at, which one did I just open? AGI. But I was wanting Aeon. Oh, mistake in the charts. So each one of these is to have its own screenshot of the plan before the trade was put on. So we can see the 1, 2, 3 bottom formation. We can see how it's building up. We can see where our entry signal would be and where our stop loss would be. All of that pre-planned beforehand. Then we take this as a guide just as the trade is put on, and then we're deciding in real time what we're actually going to do. This is our basic alert. This is our basic guide, but it is not the structured only thing that we do. So it's just the beginning. And all of the trades should be planned out this way, where you're thinking through everything that you're wanting to do in the trade right up at the beginning. And this is stage 1 of the trade. Now, stage 2 of the trade happens when the alert is triggered. So prices come up to those levels, and we come and check the prices, and we see that there's been one of our alerts has been hit. So here we are with the 1, 2, 3 bottom formation, and this is where the alert has been already triggered. As it's breaking above this area and surging, this would be where our alert's triggered, and we have to come in now and make decisions on what we're going to do. So once the alert price has been triggered, we need to spend direct attention on the price of this new trade. We have to assume that this trade is wrong. We have to assume that there is going to be a fake out breakout. We have to know that prices may spike initially away from our initial entry, but they may come back within a short time, within a day, within the 10 hours or something like that, or maybe sooner. And we have to be watching for that occurrence. If it happens, then we know that we have to initiate rule number 1 and get out. So at the beginning of a trade, we have to continually reevaluate the trade. And if we are not correct, then we're going to reduce or remove the position. And this is our mission right at the beginning, is to cut those losses. As soon as we put the trade on, we're on the mission of protecting that trade against the risks as quickly as we can. Now, once the prices have risen a couple percentage points above the entry point, we have the option of moving the stop loss up closer to the entry, much closer to the entry than we see in this trade, where the stop loss is much below and the trade hasn't been initiated yet, and we're just putting this out. As soon as the trade is initiated, we would be zooming in to reevaluate how close could we put the stop loss to our entry and be there to be evaluating it and watching it as it's actually unfolding. And the reason we want to do this is to give ourselves hands-free activation of rule number 1. If prices do come back and retest our entry level after they've gone up a few percentage points above, then we have our protection as close as possible if we're not paying attention. So after we've had a successful entry, then we can move on to the next stage of the trade. Now, the thing is, we may have rule number 1 kick in. We're not correct, so we remove the position and we start again. We move back to restart again on identify. We review that whole market and identify where we would be trading it and how we would trade it, and we start the whole loop over again. So every time that we go to stage 1 and it fails, we go back to, stage 2 and it fails, we go back to stage 1 and re-identify everything. How long do you view the price before you increase the stop loss? There are it's fluid as the market goes. Each one is a little bit different, how you use your stop loss. But for the most part, I'm waiting for prices to break up above my entry, and I will give it time to come back and retest the number 2 spot and then go back up. So I'll leave my stop loss below my entry point into some areas where it's technical support and resistance, in just below technical levels. And that's my emergency stop loss. But if I put on this trade and it starts to go with me, it's still not high enough here for me to put my stop loss above my entry point. I would still have left it down below the entry. But as prices are coming back to these levels here, I may say, that's it. Like it's not proving me correct. This should not come back to retest these levels at all, or I haven't got the right timing. And so then I would just get out. And I would be now going back to stage 1 as reevaluating, where would I get into this? I still believe in it. I'm still bullish. I just took my losses before. There's any chance of it going down to being a fail, a fake out breakout where it comes back to new lows. I don't want to be holding that. And so I want to be like a mosquito, really skittish at the beginning. And so you will put on the trade a number of times before you get a nice clean entry. They're actually quite difficult to get a good, nice clean entry. But once we get a good clean entry, it'll make back all of these small losses from testing it out at the very beginning. This is another reason we use rule number 2, which is that we only put on a part of our position at the beginning. If I have $100 to invest in this, I'll only start out with 50 at the most. And then I'm going to be really skittish with that $50, and I'll get out when I'm at $48 and say, okay, I'll try that again. Now I have $48. Next time it comes up and it consolidates and is showing strength again, I can try again. And I'm watching. It's got to go and take off right above. From as soon as I put that trade on, it's got to be taking off, and it can't look back. Otherwise, I don't have the right timing, and I should get out of that trade. But I'm only putting on a little bit of my trade at the beginning to help reduce the risk. This is what all these plans are for at the beginning, is to reduce risk. So hopefully that helps. How long do I view price before I increase the stop loss? We'll go over more about increasing the stop losses here in a second, because there's a couple different strategies for it. So here's a practical example of stage 2 in action. Here is an example of a failed trading signal with losses taken correctly. And I'm going to go to this page here. And what we're looking at is MadeSafe coin. And I'm not sure if I have that. Here, I do. Okay, good. I thought that just occurred to me. I think I already saved this in here. Here is the alert. Was set on December the 3rd in this coin. So we saw the 1, 2, 3 bottom formation. Things were consolidating. We said that if it breaks above the yellow line, that's where we would buy. And then prices faded back. But the alert, we kept it going. We just kept it written down that at above those levels, it would be a good time to buy. And I recall as prices were coming up, we were talking about this in the Discord chat, and I was saying, look at this. Here we're coming up to our alert levels. And I put out this picture, or maybe it was a picture just before this, it must have been, showing these levels. And as prices came up and squeezed against it, there was a few of us buying into this position. And within 10 hours, prices came back and went below our buy-in level. And so in the example here, we were stopped out just below our entry level. The stop loss never was moved above our entry, and it could have been, and it would have saved some more losses here. But you can see that after that, it just continued down, 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 and even further down after this. So it was a really good example of a good trade signal. You know, like all of the components were there for the signal. We see the on-balance volume was getting stronger. We see that the RSI was strong all the way along. But prices immediately turned around and came back as Bitcoin did its drop down. And if you weren't prepared in advance to get out of that, as soon as it came back to your entry level and you didn't have that plan in advance, knowing that I'm only putting on a part of my trade here, it's very early in the big trend, and I'm going to get out immediately if it comes back and tests my levels. I don't want to lose more than a couple percent on that trade. If it takes off and goes, I'm going to keep it. So this was a good example of using the rule number 1 properly. So prices moved in our favor for the first few hours, that prices retraced sharply down below our entry level. So ideally, rule number 1 would have kicked us out of the trade at that moment as it came down. So there should be lots and lots of times where you're going through trades like this, where they look good, but you have to get out and start again. Wait for that thing to reconsolidate above about the same levels as it comes back up here, and then you would try again. And one of the times as it's consolidating and actually coming up, it will be the time, and it'll be worth it to be watching and being prepared like this all the time. Okay, sorry about that. Stage 3, stop losses. So here in this trade, we can see that we had the 1, 2, 3 bottom formation, moving averages crossed over. It gave us our buy signal, and prices have taken off. And so we can move our stop loss up above our entry. This is a great trade, nice and clean entry. Prices did not come back and hit our stop losses, or, it just took right off. This is a great trade entry. And we want to keep trying over and over again until you get a trade entry like this. Then you put your stop loss up above it. And now it's time to wait and see how correct you are. So in my strategies that I'm working right now, I'm trading for the trend and not the waves. And I'll talk a little bit about some of the troubles of that strategy so that you're aware of what might the difficulties be. But for my own part, we may be at the earliest stages of a massively long bull trend. We're kind of in the foothills before the mountains. And as you can see in this picture here, the clouds are obscuring the mountains themselves, and we can't see. We don't know how high the mountains are. We don't know how tall this goes straight up or what, because our view is clouded. We don't know the future. But we're definitely in the plains, that flat land of all the bottom formations, and many of the coins are already starting up these foothills, if you like the analogy. And so thinking that way, that we are in the beginning of a longer trend, then we want to keep our stop just above our entry point and keep our stop losses way back from the markets to let the markets have room to swing to their 50% retracement levels on the Fibonacci's, plus or minus a bit depending on the technical levels. And so with this strategy that I'm going to show a little bit more of here, we're willing to risk more of our money with our profits than we were with our first entering a trade. So we're trying to be sure that we have a chance for staying in the trend for the full move. With our profitable position, there is no risk. And because we're in a good profitable position and we're holding it, then we don't have the troubles of trying to find another good entry. It's very difficult to get a good clean entry. So when you do have one and we're expecting a trend, it's really good to be sure to hold it. We want to hold our position. And so the risk expectation is different at this stage of a trade than at the very beginning. At the very beginning, everything is risk avoidance, risk minimization, risk control. Rule number 1, rule number 2 to change the position size. But after the trade is profitable, now we are proven correct. This is the time to increase your risk, actually. So trading for the trend, not the waves. After a nice move from our entry target, I want to keep this position instead of jumping in and out of every wave. Once we get a nice clean entry, getting a nice clean entry on a trade is a challenge. So I want to hold. I want to keep my stop losses below the 38% Fibonacci instead of the 50%, thus risking the unrealized gains for a chance of holding past the dip. Holding past the dip for much, much greater profits over the long term in the months to come. And so now I want to go over a couple examples. And the first example I want to go back to is Bitfinex, Bitcoin US dollar. Go to the 1 year chart. And we'll go into some of the waves and the trends right now. That's an awesome question. I appreciate that. Here we are, transported back in time to 2015. Here's the end of 2014, just as I am discovering cryptocurrencies. One of the people who I was teaching RuneScape merchanting to sent me a message, and he says, have you heard about cryptocurrencies? And I had to go and Google the word because I didn't know what a cryptocurrency was. Well, it wasn't long. Like the bug hit me immediately. As soon as the more I learned, I was down the rabbit hole. But this is just as I'm learning about it, prices were going into this big crash. And now, of course, I already know about the 1, 2, 3 bottoms. I've already been working this trading plan for a lot of years. And so I'm hunting and I'm seeing we're at a bottom formation here. We hit some new lows. We hit a new number 1 point. I'm seeing the 1, 2, 3 bottoms. I'm watching them all here. And so I was trading for the long-term trend and not the waves. But what we have here is a pretty flat area with a couple waves. And so I was trading for the trend and not the wave. And let me zoom in on these waves a little bit. And we'll take a look at the trend in a moment. You likely already know what it is. But as this price consolidated, I had trades going on right here. And then my trade was kicked out probably right in here at pretty much break even or a little bit of a loss. And then I was trying to trade here and it turned into a loss. I was trying to trade here and it turned into a loss. I put on a position right about in here and it did really well. I was very excited about it. And I think I got out right about in here at a very small profit after all this time, because I was trading for the trend and not the waves. And so as a wave went by, prices came back, and I ended up not making any money in this whole time of all the way through 2015. I ended up making some profits, but it was a struggle all the way along because I was trading for the trend and not for the waves. So every time I would get an entry, I would leave my stop loss way back because I wanted to give the market room to come back and do a consolidation and then continue on in the trend. But you can see it came back and it didn't make a consolidation and continue on in the trend. It chopped sideways. We were in a sideways trending market, we were in a sideways market, in a choppy market, not in a trending market. And so I'm erring on the side of trading for the trend, which means that this kind of thing will likely happen or could happen to me again, in that I put on a trade, I leave my stop losses way back, nice, so that I give the market room to do its move, but it moves all the way back and hits my stop loss and leaves me with almost no profit. Whereas if I had traded differently, where I kept my stop loss moving up tightly with the prices and I didn't give them any room to move down, then I'm going to be pulling out a little bit of profit, maybe a little bit of profit here, but at least you could be making some money in these choppy markets, and even more if you're willing to trade this top formation and go short and trade these smaller ranges. So what I'm doing is I'm erring on the side of leaving my stop loss back so that the market has enough room to go up and pull back and consolidate, and then go up and pull back and consolidate, and then go up and come back and consolidate, and then go up. So now we're really into the tide is of change. You can see the difference here where the waves were coming in and out, but now the tide has changed. So every wave that comes in, it doesn't go back. Another wave comes in, another wave, and it just keeps moving forward. And through this, this lifts all boats as this trend is going on. And so right now we could be in a position like we were in early 2015, and we might be in for a lot of chop for quite a long time before the trend comes in. So when I'm talking about the way that I'm setting up my stop losses, you'll want to consider that against your own risk tolerance and your own trading ideas as you're going through all the markets. How do I keep myself looking for trends even though it's been so long since we've had one, and I just keep looking and looking and looking and looking and looking and looking? Well, let's go back to this page. No, it doesn't have the data. Does this page have it? There's a little bit of it. My account value was at $533,000. And you can see that was essentially from January 2017 to January 2018. It went from about $7,000 or maybe $10,000 to $500,000. So that's 10,000 to 100,000, which is 10 times your money, and then 5 times that money again. And so I do believe that the cryptocurrencies are going to be doing even greater moves over a longer period of time. And so I'm wanting to take the money I have and grow it into $1 million. And so I really want to work hard at making money work for me. So that's how I keep myself looking for trends and looking for trends. And as for no profit, I've got to say, part of the reason I'm doing this is to teach the philosophy of money to other people and to practice it over and over with my own thinking so that I continue to do the right things with my own money and keep growing it. I was telling the story earlier about a Bob Proctor presentation that he talked about how to retire wealthy. And he said to a young guy, do you waste or blow or spend $20 a week? And the youngster said, sure, easy. No problem to spend or waste $20 a week, just going to a coffee shop or what have you. And Bob said, what would happen if you were to take this $20 every week and save it and fold it up and put it away and save it? If you did this every week for a year, say 50 weeks, you would have $1,000. $20 times 50 is $1,000. And he said that as you were doing this and you were building up that $1,000, you would build up a habit of putting away that $20 every week. And you would see the money growing every week. You would have that feeling of accomplishment. You would build that habit of putting away that $20 every week. And he said, and what if you did that for 40 years, your entire working life? How much money would you have? The kid said $40,000. And Bob said, that's true. But now, if you had taken this money and given it to somebody who knew how to grow it, and they were able to grow that money at 10% compounded per year, you wouldn't just have $40,000 at the end of your working career. You would have $400,000 because of the power of compound interest. And then he said that if you had found somebody who could grow your money at 12% per year, you wouldn't have $400,000, you'd have over $800,000 by the time you had retired. And all you ever did was put away $20 per week. And if you had found somebody who could grow your money at 14%, and or is it 12%? There's plenty of people who could do that. It was 10, 12, and 14%. And at 14% per year, you would have over $1.2 million when you retired. And all you ever did was put away $20 per week. Just that habit of putting away that money. The thing is, when you're going through that habit of putting away that money, as you put that $20 into your kitty for growing, that money never comes out. It is there to work for you. It never comes out. And sometimes I consider my money as like an insurance policy where I have it in place in all these different cryptocurrencies, and it's like an insurance policy. If that crypto does take off and do 1/10 of what Bitcoin has done, it's going to pay me back ridiculous returns. And I'm insured now. And I tell the story over and over. Fool me once, shame on you. Fool me twice, shame on me. And so Bitcoin fooled me. in January of 2011, if you had bought $10 worth of Bitcoin, you'd have 40 Bitcoin. 40 Bitcoin today is worth a lot of money. And that's $10 to buy 40 Bitcoin. And that's insane gains for what you would have. And so if Bitcoin did that and it fooled me, I don't want to be fooled again by a different cryptocurrency. I want to have a little bit of them. So 40 Bitcoin is $140,000, $141,000 right now. $10 into $140,000. So I want to have $10 of all the different cryptocurrencies just so that I'm not fooled again. If there's another one that takes off and does part of what Bitcoin has done, I'm in place. And it's a new technology. It's a new way of doing things. And that's part of why I keep myself going through this for so long over and over again, is I know what it's done for me. And this isn't the only time I've taken nothing and grown it into insane profits using this system. I also went from 2009 to 2013 trading this very same system inside the game of RuneScape, where I bought and sold items inside the game and turned myself into a multi-billionaire. And so I know I'm going to be doing the same thing again, not just with cryptocurrencies, but also with commodities and stocks and everything else as well. Right now I'm focusing on cryptos. And so the 5 stages of a trade. This is where I'm leaving all my stop losses below those levels. And so if we go back to here, this isn't the prettiest page, but DLT is at 122%. This is our entry. And let's go over to Binance. DLT. Here's our entry, DLT. We had the bottom here. This was September. Came up through November. And look at these big buys going on, these huge buying candles. Prices came back and they started to make a 1, 2, 3 bottom formation. And so we put in the order after this action happened. And it was in the middle of December, it'll say at the top here, December the 12th. And now we can see from December the 12th where our alert was first put in. I can drag this back. So here's what we were looking at when we put on the alert, and prices faded back and they went sideways all the way along here until finally the alert was triggered back here. Prices came back to the alert level and then they started to stage higher and higher and higher. And for this one, I would recommend that our stop loss be left way back down here and leave the market, have room to do whatever it's going to do, and then be in the market for whatever it's going to do. And then the next stage is higher after this. I'm assuming that Bitcoin in the background here is doing a big bottom formation. It's going to be coming up along with these alts, and that the alts are going to stage up, pull back, consolidate, and then move up on the next step. But as we saw from 2015, that may not be the case at all. It may be that we're going to be in choppy markets, and this is the top of the chop. And so prices are going to come up here, and they're going to retrace all the way back down to these levels. Maybe Bitcoin will slip lower and retest the old number 1 points, and all of the alts will slip and as consequence, and I'll give away all my profits. You know, I've got these profits already now. I could just sign out here at 200% profit and take that and run. But I'm wanting to have the thousands of percent profit instead. And I know that the thousands of percent profits are out there because I did this massive study of the bull market. My mouse has stopped. I think the battery must be getting low on my mouse. So I did this bull market study here, 2,400% profit, 4,200% profit, 200%, 400%, 400, 700%, 600%, 500%, all sorts of fantastic profits going on here, and it's not just my mouse. And so I had to close that. I don't know why it wasn't working. So these are the reasons why I'm trading this way, and I want you to know the difference between the following the trend approach versus the following the chop approach. The following the chop approach is going to move the stop loss up much closer in behind the prices as prices are moving along. So for this live example, we would move the stop loss right up close, at least underneath the 3,200 level here. But for the trend following method, I'm not concerned about what the little bit we're doing here. I'm looking for something going on 6 to 8 months from now. So I'm going to leave my stop loss just above my entry, and I'm going to risk all of this profit for the chance of far, far greater profit. It's a much greater risk profile to be trading or risking with somebody else's money. Stage 4 now, adding on. So here in this trade example, we had our bottom formation, we had the buy signal, and it was clean. Right away, we could move our stop loss right above our entry point, and prices took off. Now prices have peaked and they've pulled back, and the moving averages are coming close together. We have an internal 1, 2, 3 bottom formation here, and it's a potential chance to be adding on to our position. If this is a long-term uptrend, this is the kind of consolidation, maybe a little bit deeper, that we'd be looking at for our chance to add on to a trade. So with Factum as an example, I'm going to go into the web page itself here. So here's another example for trading the trend, not the waves, was Namecoin. Whereas prices were moving up here, we wanted to keep our stop loss way back in this market and give it room so that we could be in there for the longer term trend. And now we're into the pullback and the place to add on. So as Factum went from 50,000 Satoshi to 500,000 in a month, yes, that's a 10 times move, prices had retraced back to their 50% level in that long-term chart, and they made a couple consolidations right here that we can see. And this is our trend continuation pattern. Just as Bitcoin is getting strong and Bitcoin's taking off, we can see this consolidation, and we had an entry signal here. After prices moved up, I moved up the stop loss, and this came back down and hit our stop loss that I had moved up. And I was thinking, oh darn, I should have left the stop loss back further so that I could have stayed into this trade for the longer term. But as you may know, prices continued down, down, down from here, and this was the only profit that could have been pulled out of this trade. So after it topped out here, the moving averages crossed over, and down it just continued on. So this was it turned out to be a good protective stop loss on this trend continuation attempt here. So here's what actually happened with Factum. It came down, tried a couple more times, and it's faded off after that as well. Go back to our example here now. So the pullback and the place to add on. So an important perspective is that in my own mind, and this is what I'm preparing for, is I'm anticipating a 12 to 18 month bull run for the cryptocurrencies when it does start. And it may not start for 6 months from now, but once it gets underway, it'll be 12 to 18 months. So we can expect there's going to be a bunch of surges, and then it'll pull back. Each one of these sessions will take 6 to 12 weeks, just like we saw in Factum. And this same time frame will be played out in each of 4 or 5 waves from now until late December 2020. So I believe that when we look back, the charts will turn out to have shown us classic Elliott wave bull market patterns. And this is the classic Elliott wave bull market pattern. This picture is from onlinestockTradingGuide.com. And here we have the Elliott wave system. And this is kind of like what we trade with the 1, 2, 3 bottom. In ours, we would have the prices coming down, 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 down. This would be our number 1 point. This lowest point right here, we would call our number 1. We would call this a number 2, and this is our number 3. As prices break above the number 2 point for us, that's our entry signal. That's our buy signal. And then what the Elliott wave guys, they say it'll go up to wave 3, it'll pull back, it'll go up to wave 5, and then we'll have an ABC pullback. This is where we're looking to be adding on to our trades. Then we have, this is the number 1, 2, 3, 4, 5, or let me get that wrong. 1, 2, 3, 4, 5, ABC. 1, 2, 3, 4, 5, ABC. And usually after the third wave like this, it may be that the trend will consolidate for a much greater period of time. And I think that once the bull market gets going, we're going to see this kind of pattern stage its way up. And we're looking to be buying in on these C point on each of these waves. We could add on to our trade and be more correct. We could be bigger winners on our winners. Now the exit is a really important one. Here's this trade that we've been watching along here, where we had our 1, 2, 3 bottom formation. The moving averages crossed over. We had a clean entry. We could move our stop loss above our entry right away. Prices came up, they consolidated, and they came back to give us an add-on spot here with this trend continuation pattern. It's an internal 1, 2, 3 along the same direction as an uptrend. They often break out like this, and we had a great one in Link when we did our trade in Link just recently. And so then prices took off. It could have been another add-on signal here. Prices took off, and now we're coming up to a top formation. And we see the 1, 2, 3 top formation. Prices are coming down. They're breaking below that 1, 2, 3, and the moving averages are getting very close together. So this is the kind of area that we're looking for as exit points. And I'm going to have to bring this back up again. And give me 1 second. Let me bring this back in again. Here's our bull market mega study. And the reason I want to bring this in is that we're looking for top formations and when we're getting out of trades. And all of these different bull markets from March to July of 2017, December to January of 17-18, and April to May of 2018, and now we have September and October of 2018. Each one of these little bit of a bull market was less and less and less powerful. We had the biggest one in 2017, so we had 2,000% gains here, 184%, 12%, 230%, 86.80, 4,000% in Digibyte, 300%. Then I think it was 50%. So you can see that all of these were very much stronger earlier. Factum was 239, then 89, then 1.6%. But the thing is with all of these that they had in common, let's take a look at Factum. All of them had similar things in common for their 1, 2, 3 top formations and the moving average crossover. Some of the things that are most important is the break of this trend line. As it's making the 1, 2, 3 top formation and it's breaking a trend line, even before the moving averages cross over, there's our first exit signal notification right there. And we could be getting out and taking some of our profit on that break. Let's go to Factum on the 89%, and we'll see a similar pattern where it's come up to a 1, 2, 3 top formation. Here is our trend line break right there. And it's time to get out right at that moment. Then we have the moving average crossover, and it's time to get out on the second part of your trade. Now let's zoom into Factum, and we'll take a look at this 1.6% profit. So here again, it was very much smaller, but it still came up to a 1, 2, 3 top formation, and there's the trend line that it broke as our exit signal, and then it finished the 1, 2, 3 top formation. The moving averages crossed over, and this is to completely get out of the trade. So this is the kind of thing that we're watching for at the end of our trade, and it almost always happens in concert, where all of the cryptos are making top formations at the same time. And so this is what I'm actually watching for now in all of these, is looking at these trend lines to see what's going on in these markets that have made such nice moves. So if I go over and take a look at Link, this is another one that we were watching. We're just definitely watching for this pattern to occur and calling for this down action in the market. I actually sold out of mine right there. And for this very same reason, we can see this trend. We can see this trend line going on here. It's a very steep move. It's making a 1, 2, 3 top formation at the top, and I just thought that's pretty crazy what it's done all the way along here so far, and it's accelerated and then accelerated again. Usually this 1, 2, 3, the third leg of the acceleration is the exhaustion. That's where the craziness is coming in. And the craziness is coming in because we've had so many gains that now people are jumping in that are new to the market. They haven't invested in this before. They see the great gains in it and they want some. Their fear of missing out on this big move. And so they're buying into it here. They're FOMO trading. So they put in their trade here. They probably bought in too much of it. Maybe they put their stop losses too close to the market. Prices came up again they had an event going on. Now we see another top formation, a weaker volume of buying on the second high. And as prices cracked this 1, 2, 3 top formation, they broke this trend line. They broke another trend line across the top here for a bit of a head and shoulders formation. You know, all of the signs are coming in and coming in and coming in, and then it's cracking down. And much the same as what's going on in Bitcoin now too, where the signs have been coming in, and now it's right on edges where it's going down to make a new number 3 point. This is going to take all of the alts with it right now. One of the reasons I'm watching for this is that it's no good to even be in Bitcoin right now. If you were selling out of Link, it would be good to put that right into US dollar Tether at this moment. IOST, another one. It was making a really great gains, made a top formation, broke this trend line, down it's coming. As Bitcoin is showing weakness, all of the alts are showing weakness beforehand. So this exact moment is what we're looking for. Here's another one where it's making the top 3 times, coming up to the top, broke this trend line, and it's crashing quickly at the same time as all these other ones. Quite suspect. So here's another one showing weakness at the same time Bitcoin is just slipping over the edge here. And Ethereum is making a deep dip. Litecoin is fading off. You can see the trend line. It's broken here too. So it's definitely a moment to be considering moving things to USDT as things are coming down here, or taking short positions if you have the option for it. Is there another indicator that can help to prevent fake breakouts as much as possible and to recognize a false breakout? The best thing for that is to step back from the short-term trade bars and to stay in a 12-hour bar format. So when you're this far back from it, you're not going to be faked in as often. The second thing is to use rule number 2, so that when you're first putting on a trade, that you're putting on very small bit of your position. If we look back into a longer term thing here with a 1-day view, we're really, if we're into the half-hour bars, we're zooming in so close on these little dips that we're overreacting and reacting too often back and forth to waves instead of the tide. So the longer term perspective is important. Then the second thing is, if I'm going to go to Poloniex longer term market. The second thing is to recall how much these are going to be moving. And so putting on a small bit of your position when we're just still on the runway is fine. And keep most of your money in fiat, keep most of your money in Bitcoin, keep most of your money in gold or silver, and slowly put stuff into this as it's proving us correct. So don't try to pick bottoms. Most people say don't pick bottoms, don't pick tops. And this is why, because you keep getting killed all the time trying to find the exact bottom. Instead, resign yourself that you're going to let this money work for you for the rest of your life. It doesn't have a hurry. It doesn't have a timeline. It's always working for you. And that way we can be looking for markets that are not just cryptos, but anything that's moving. And we're looking to take our money out of the middle. So once the momentum is changed, we could be taking our trade position and then get out of our position. So we're never at the bottom. We're never looking for the tops. We're always waiting for it to change direction. And then we're getting on. And then we're getting off when we see it topping out. So any chart I see is only 1, 2, 3 trend lines in EMA. Am I missing something? Hopefully that helped. If there's another indicator to help prevent a false breakout, I'll just a couple more words on that. One thing I am doing is to include the RSI and the on balance volume. So I'm not just using the 1, 2, 3 bottom formation. I'm trying to look at some of the underlying forces that are at the same time as this. And so when we're coming up to a 1, 2, 3 bottom formation and things are coming up to the number 2 again to break higher, at that time I want to see, do we have as strong on balance volume or is it weaker? Because if it's weaker, then we're coming up to like a double top and it's probably going to fall back from that. It's not going to poke through and go further because there isn't the trade volume to go with it. I want to see the RSI diverging properly so that it's telling me that it's going to go higher. Any chart I see, hopefully that helps, Jimmy. Let me know if there's any more that I can talk about for preventing the fake out breakouts. The main thing is to go back to a longer time perspective and take smaller trades and take this as a longer term view. Look how many months this took for it to come down from April, May, June, July, August, September. It's going to take a long time for it to bottom. And then when it does get going and you get a good trade, it's going to be months and months and months of nothing to do but just watch it go. The relative strength indicator I can't tell you the mathematics of how it works. But there is a video in the last week of trading that talks about how I use the relative strength index. So I'll revert you back to that video where we have week 2 relative strength indicator and cryptos. And this has a video, it's about 7 minutes long, that goes into detail about how that works. And that's the best explanation I can give to you right there. It took me many hours to put that together so that we could have that nice brief explanation. And hopefully that helps you. So basically with the RSI, it's the relative strength, and it is an oscillator that goes between 0 and 100. But it's the change of that oscillator that's the most important thing when it diverges from the prices. So when we see it coming up and then coming up again and prices are coming up, that's not what I'm looking for. And the on balance volume indicator down below here, This one I have not done a specific video on, but it's basically telling you where the buying and selling is going. So when there's volume and you see these candles underneath here for volume, you can see this little green candle, a little green candle here, then a red candle and a green candle. These are the indicators as well, but the on-balance volume oscillator makes them more clear and stand out which ones are, how much selling there is and how much buying there is in the market at the time. And so what I'm looking for is that the buying be strong and as strong on the next top. If we have strong buying on one top and then it comes up to another top that's equal, but you see we have much weaker buying, then that's a sell signal. It's telling me that the market just doesn't have enough power to go higher than that. And sure enough, it came down quite a bit. So that's what I use this for, is to look for that difference at those specific moments. And I keep these around there just to compare things at those moments to see where these divergences are. Hopefully that helps. And well, Chandra, you're asking, any chart I see is only 1, 2, 3 trend lines and EMA. Am I missing something? Are these charts that you are seeing, like your own charts, that you look at a chart and you just say, wow, look at that. There's 1, 2, 3 bottom, there's trend lines, and the exponential moving average would cross over here? Or is it that you're looking at my charts and you're only seeing these things? Because that's my system. That's what I do for my trades. That's what I look for, is those patterns, and I use those indicators. And so I know other people would be marking up these charts and they would look way different. Is that catching your question properly? Because I'm not sure what you're asking by saying that any chart I see is only 1, 2, 3 trend lines EMA. Is that your charts or my charts? Well, Ethereum, you've come back to killer levels. You've squeezed it back as far as I could let you squeeze it. Litecoin, you've made a head and shoulders formation here. Yes, I am trained in this system as well too, and no matter which chart I look at, that's where my eye goes. Especially right now, because everything really is at the end of a downtrend, and they are making the 1, 2, 3 formations everywhere. The thing I'm freaked out about, worried about, is charts like OMG. It actually has come down to brand new lows. So that's worrying to see any of them come down to new lows. How about Lisk? Did you break to new lows yet? No, you're resisting. You're holding right at the edge. And if they hold at the edge, that's all good. But if they start breaking to new lows, if Burst is breaking to new lows, no, that's good. Civic Coin, not to new lows. Ardor, no. Basic attention token, no. So anything breaking to new lows is worrying. And that's the only one I saw was OMG. If we have a whole raft of that happening, well, then we're going down for another whole level down. And we certainly are as close to that edge without being over the edge as we can get. We've got stellar, just Bitcoin pushing down to levels. Everything's looking weak. It all looks like it's going to be setting back. Except that, let's go to the 1 hour view and draw this back a little bit. There is that tiny little 1, 2, 3 bottom formation that I noticed, and I sent out emails and pictures about it right there on, which day was that? January 17th. This is where Litecoin made a little 1, 2, 3 bottom. It turned into a larger 1, 2, 3, into a larger 1, 2, 3, and now it's testing that the top level of that right now. Everything else is failing down to new levels. So if this resistance starts to go back up, that's huge. I've been watching this really keenly, but I'm not expecting it. I do expect it's going to come back deeper on this. Crazy markets. So many of them are looking good. Let me double check here now. So this is the greatest difficulty. When to take profits is ranked at the top for the difficulties for the traders that I've surveyed, people who have taken the course, people who I've talked to. This is what they say is the worst, is for when to take profits. Everybody loves their cryptocurrencies. How do you ever let go of them? And so by going through the charts on this mega bull study, going through every one of them and seeing where was the exit point on this. I don't even know what market I just opened up. Burst coin. So where was the exit point? Here, when the moving averages crossed. But we have the 1, 2, 3 top formation, and this trend line broke much earlier. So we could have gotten out at much greater profits, at least part of it here, and another part of it here. We have the 1, 2, 3 bottom formation nice and clear in our mind. Look at this. Took 2 months, 6 weeks for this to build up and to finally take off. We've been building up for much longer than that now. So I think we're going to see something spectacular when they start to go. But burn this into your mind as well. The 1, 2, 3 top formation, the break of that trend line, those are moments to close positions. Those are moments to get out. So take your time with this. Grab a cup of coffee. Take this and really go through it. Make some notes on it. Write things down. Ask questions. Bring them up. Take this screenshot and bring it over to the chat and say, you know, on the Pascal coin in the crypto bull market study for the bull run of 2017, you've got this marked on there. And why is that? Why not that? Why not the other thing? So here's another one where the market is building and trending and building and trending, and there's nothing to do. The moving averages didn't cross over. There's nothing to do. It moves up and down, up and down, up and down, and then we're in it for the big run up. So this is definitely where, if you zoomed in on this, there would be a 1, 2, 3 top formation here. You can see this trend line was insane, much like we just saw in Link, where after it's going up and then accelerating up like this, and this was, I don't know, for a week and a half, this would have caught my attention as it's going up and going up and going up. Now I'm going to be watching for that kind of trend line break and to be getting out of part of my position at these levels for sure. And then as the moving averages crosses over and we have this larger 1, 2, 3 top, it's time to close the whole position and to get out of it completely. Once we're seeing these things happen in the next run, I'm going to want success story after success story saying, hey, look what happened. Look what I did. Here's my 1,562% gain on this trade. All I did was bought, and then I held all the way along while the moving average didn't cross. This would have been tough not to be selling out at these times for sure. Really just phenomenal studies. So it may be that taking profits is ranked as one of the top difficulties for traders because we are all thinking about an all or nothing approach to closing the position. If it does this, then I close my position, rather than thinking about scaling out of the position the same way we scale in with rule number 2. So instead of thinking of just selling everything as soon as the prices come up to the top, sell a small part of that and then look for the second part after the moving averages cross over. And again, we're looking at the 12-hour bars, so it happens a little bit later than it would be on the 4-hour bars. So taking action on a top formation is similar to a bottom formation, but the 3 indicators are used in a different order. And I'm going to go to some live charts to show that, because now we have some bottom formations that are in place. I'll go to Binance. And let's go to DLT. where we have the trade set up. We can see the break of the downtrend line here, easy. Then we're seeing a larger 1, 2, 3 bottom formation, but even the smaller 1, 2, 3 bottom formation here. Then the moving averages crossed over, and we have our buy signal. We actually do have a buy signal right here on September 25th or 6th or thereabouts. So there's how the bottom formation signals start out in the order. The first one is the break of the downtrend line. Usually the second one is the 1, 2, 3 bottom. And then on the breakout, after that, usually you'll have the moving average crossover. So the moving average crossover and the breakout timing switch back and forth. But usually the downtrend line is the first thing that comes up. And the downtrend line is not a signal on its own. It's just an early warning that something is coming. But when we get into the top formations, it's the other way around, where we'll have the 1, 2, 3 top forming. We'll have the move and the last thing that then we'll have the trend line broken, and that is actually the signal. The signal is when that trend line is broken. So if we go to link, just because I know we are working with this example, when this trend line is broken, that's the signal to sell. And it's usually at the time of the 1, 2, 3 top formation and before the moving average crossover, depending on the time frame you use. So here with the 4-hour bars, the moving average is crossed over pretty close afterwards. We can see this is a 1, 2, 3 top. Prices started breaking and the moving average is crossed. So some of our strategies say to get in on the moving averages crossover for the 12-hour bars and get out on the 4-hour bars when that moving average crosses over. This keeps the trades tighter and works much better for choppy markets, for keeping the profits that you've made. So you can see that they're opposite setups for the bottom formation and the top formation. With the top formation, the breach of the trend line is the first sell action trigger. And then the exponential moving average crossover would be the closing, or the last reminder of closing that long position. Getting clear on exits. Same thing. After the exit, evaluating the learning. Each time we go through a trading cycle, it's a chance to pause and study. We have a clear and simple standard process for following for each stage of the trade, but though it's clear and simple, it's by no means easy. The signals are rarely cut and dry, so we can come up with nice examples that make it look cut and dry, but often the signals are ambiguous at the time. Though when you look at the charts in hindsight, you go, well, that's obvious. This is what should have been done at the time. But often, even though we have a clear process and it's simple, the signals are often ambiguous, they're not cut and dry, and they're very difficult to do. So we want to go over the trades as we started them out, all the way through where was the add-on position, where was the add-on position, and where was the final exit position. What could we have made out of this 400% profit over a period of 128 days on this trade? Really pretty amazing kind of profits that I think are coming up again for our crypto world. Can the Ichimoku cloud help with the exits? It absolutely can. Let's take a look at the link in the Ichimoku cloud. So I can download Ichimoku cloud setup. Then I'm going to go back to Binance, Bitcoin filter. Let's go back to link and 3-month view. So link is just coming into the cloud right now using the 12-hour bars. So the 12-hour bars would keep us in there for a much longer time. But the 4-hour bars, you can see how it's already cut through the cloud, and this would be our exit signal. And you can see they match up pretty well. The moving average, the 1, 2, 3 top formation, they work out pretty well to doing the same thing as the Ichimoku cloud. So here we can see add-on places where here's our original buy. As prices consolidated and they're coming off of the cloud, there's a buy signal. As they consolidate and they're coming off of the cloud, this is a buy signal. Again, here's a buy signal right here. But as it's coming back to the cloud and through the cloud, this is your exit signal. This is your sell signal. So they could help with the exit, but the 1, 2, 3 tops and the exponential moving averages really come out to show very much the same thing as the Ichimoku cloud. As someone was mentioning in our clan chat, he said that what we're doing there is pretty similar. No wonder they work out well together. But you should be adding in oscillators to confirm some of these trades, which is why I'm putting in the on-balance volume oscillator. Another one to do would be the MACD indicator, MACD, and I'm not familiar with it. Though I've used it a bit and studied it a little bit, I've been sticking with the same pattern for all my stuff. So then I have a simple same pattern to compare everything against. Hopefully that helps. When scaling in, buy half, then adding on, we buy the second 50%. Is it the same one where you're coming out? It could be. You certainly could. And it would be adjustable as the market's moving along. But yes, for certain, if we were looking at something like Link and its prices are coming up here, we could have sold half our position and then wait for the moving averages to cross over and say, yeah, okay, I'm going to get out the other half of my position and just wait. Now, you know, this market may come down and consolidate and start to go somewhere. I'm going to switch back. This is Ripple. Ripple is losing it. It's just coming down below some key levels. It's been losing it and fading a little bit and then fading a little bit. It's going to crack soon. It's going to make a pretty significant move downwards. The whole market is getting softer here. So this would be a great short position. Ethereum, I think, would have been, well, obviously would have been a good short position. And it was showing it. Just candles downward, just fading off. No turnaround feel at all to it. No strength coming into it. As it's coming down to all these significant levels, it just kept fading and fading slowly. Hard to say. I think it's got some more downside into it, which is really sad. It's too bad it doesn't get stopped right in these levels and hover sideways at least. But Litecoin, look at this. We're just talking about trend lines and exit signals. This trend line is not perfect, but pretty strong. Not perfect, but pretty strong. And Bitcoin is still feels like it's going to just dipping to new lows, and I think it's going to do a slip here pretty quickly. And I don't want it to, but that's what the charts are telling me. Here's another one fading off. And you can see where it's heavy selling, up, heavy selling, up, heavy selling, up, heavy selling. Hopefully it's up from here, but that is not looking good. And when you combine all of them not looking good, it probably means that we're in for another stage down. For certain, it's not picking up for our tide change to the bull market. That isn't coming right away. Weeks away at the earliest. If things all of a sudden turned around and started to look bright, it would be some time yet. Sad. But we'll continue watching. We'll continue going through day by day and keep an eye on it and come back to our Discord chat for the latest information about whatever is going on. Zoom into the 5-minute view, and there's no bottom formation turnaround here. It's right against key levels here for Litecoin. Not giving me a feel of turnaround here yet, which is rough. Wow, hour and 20 minutes. Wasn't expecting that long, but I wanted to go through these 5 stages in good detail. Now I can go back through, and over the next couple days, I will edit this presentation together so that it combines with the one that I did earlier today, and I'll take the highlights from both of them and put them together. So you'll have to give me a few days on that, because each one of these presentations is a little over an hour long. So it's going to take me at least 4 or 5 hours of editing to get everything put together and then to process this and get it uploaded so that it's available. So I appreciate having you guys here. I love the questions. Great to have you here. And I can't wait for all of the success stories to come in, but they are definitely delayed from when I was wanting them to come in. All of this soft markets here right now pushes our success stories back another month at least, from what I'm thinking now. Good to have you here, Jimmy. Thank you for being here, AOL Chandra. We've got a few other people here. We had Crocatoo saying hello for the first time as well. And it is almost my bedtime here, so I'm going to sign off. Give thanks to the powers that be for the opportunity to be working with you guys from around the world, and look forward to growing our community and having more success as the bull market starts coming along. I'll sign off for now and wish you guys all the best. I'll talk to you soon. Bye for now.